We're live. It's March 8th, 2023, PPT coaching call. And Kobe, you're the floor, sir.
Thank you so much. I wanted to, I felt a little off, which was on Friday. We had, last week, we had this really nice trend day up, and I think we had two trades on the ES. I placed them in real time, and one was runner 93 points up, and the other one was 95 points up. So it was a very successful trend day up, and I didn't get any feedback from any comments of in the room, and I thought, oh, okay, maybe not everybody caught that trend day, even so there was some good anticipatory posts in the red channel. And then we had a really nice weekend because it was the first weekend where the monthlies were in, because we had the rollover from one month to another, from February to March last week. So that's typically a very exciting weekend when you have monthlies, weeklies, and dailies that you can reflect upon. And I did the debriefs and put them over the weekend in there. And they already showed that Monday will not be an exciting day. And that's very rare. That's why I posted it too and said, hey guys, I will be sidelining on Monday. And this is super rare. Now, why is this rare? Because all participants in the markets are humans, grew up with Monday being a Monday, meaning you had a restful weekend, and Monday is basically seize the day. So Monday is not an easy day to sit on your hands because everybody is basically ready for action. And as such, if you have charts that are not conducive for good trading for a Monday, only the professionals are smart and just sit this one out and go to the beach, go to the movies, depending the weather where you live. And for me, this is basically an exciting thing again, because everybody is battling around on a non-relevant day for the Monday, and then Tuesday becomes basically the highlight of the week. So I announced this thing, got confirmed with how the openings were for the ES and the precious metals and Bitcoin on Sunday when Globex opened. And I was really excited basically again. Now here's the psychology for professionals. You come out of a strong finish of the prior week, Friday, trend day, which only is making it reasonable that in most cases you have a pause day because you have an action day. Now you have a breather. So that Monday is that pause day. That's part of the reasons why I didn't feel like any kind of financial exposure is necessary. And for professionals, you come with a very strong mentality into the new week because professionals are conditioned to all the time be ready, to all the time trade if the market gives it up. And they have a conducive mentality of, okay, I traded well last week, now I go into the new week again with a good mentality. For amateurs, it's the exactly opposite around. Most likely they don't catch the trend day, it being the most difficult day to have entries. And then there's this fear of missing out and this willingness to action. And in this case, it's double because it's Monday, where everybody is like ready to take the shovel in their hands. This results that these tight range days for Mondays are actually more beautiful than other ones because all these amateurs get faded. Now, when I had a very successful day then on Tuesday, catching again with not being exposed on the day where there's not much to be gained, and be fully exposed even with double trades and more size for Tuesday, again, there was no response. No, I don't get a lot of response in general because we're a very small group, but I was like, okay, this is like excellent trading going on here, and hopefully everybody else is making money too. And I wrote that poll. So let me get that. Here's the poll. So I have 16 subscribers right now on my channel. That's something that already confuses me, that typically there's only a participation of maybe 8 or 9. So all you lurkers, when there's a poll at least, little contribution, because it's really helpful for you. If the more there's nothing happens with this data. Okay, I do not keep books or extract any kind of beneficial to my end or anything business related. I'm a trader. I don't care about all this other stuff. Um, but participation is really something that is benefiting as it is right now to all the ones that benefited. So 8 people watched this and 70 only voted. So whoever is Mr. 8, you're supposed to vote too, because this way the picture gets clear, especially with these small sample sizes. And what I was fearful of got confirmed, which was most of the people, over 2/3 of the people, 72% didn't have a short. I'm like, how come nobody's short? Where do I? And I always look for the faults in myself. So, I mean, you guys here to learn something, and I'm like, why would nobody be short? So today's aim that I'm having is trying to close the gap. Why for me and my process automatically on that Friday, and I leave that Friday out to not take too much of your guys' time, but we'll do that Tuesday. It is an absolute must to be short on that day. Now, I know that whatever you might miss an entry, or maybe you weren't even here, or whatever, these reasons are all not important. But if from these 70%, 2% are people there who actually wanted to be short or would like to know why I was very aggressively short, this is what's happening today. I will share um, what I find, and there's a reason to that too, which is it's not my selfishly thing to have aims or something, but if you have a system, you cannot afford to have the big winning days, because those are who improve the system by far, and those are who rip you out of this break-even trading, or when you're slightly underwater after a few trades. There's no discretion. There shouldn't be any discretionary. Oh, today I trade. Oh, today I don't trade. It should be 80-20, which is at least 80% rule trade, rule based. And if these days are coming, right now I'm talking days, but specifically trades that are falling within your category of your system, you gotta take them. It's obligatory. You cannot have a great system and then counterfeit it by making it discretionary when you feel like taking a trade or when you don't feel like taking a trade. And I think Tuesday is a very good example of why everything, literally everything, all the ducks are in a row. And I will make this clear with a little TA session now, why this is a day that you expose yourself. And that being said, typically Bitcoin and ES is more Matthew's side, and I do the precious metals. We stay a little bit out of each other's way because we have different systems. In this way, there's less conflict. But that doesn't mean that I, without posting too much about it, fully trade Bitcoin and ES myself as well. And most of these charts I share in my channel too, but I don't share all these entries as aggressively to not cause conflict with my partner. So to no further ado, 1 second. I prepped a few screenshots of why I think that this is a highly prime day to be engaging in the market. This aggressively. Okay, here is I do not streamline this. I right now just go through of what I actually do. So first, this thing is somewhere on a Friday or a Saturday, I start with these monthlies and weeklies to just get that really big picture. And then I start zooming in. So it's a top-down approach from larger time frames to smaller time frames. And you have all that process because I shared that live in the market if you want to review this. And then I basically said, let's Monday not do something. And then I followed up with what I will be doing the next day. And I did already go at the close on Monday, go short with one of the instruments. And right now we're talking gold, silver, Bitcoin, and ES. That's basically I narrowed it down to that window of those 4 trading instruments. We're talking daily setup with 60-minute execution, with the only exception of that one trade where I already went short on daily at the close because that it was that obvious that I didn't even worry about the next day having a large retracement into the market prepping for short. So very aggressively, and I thought that would already put some merit out there of how bearish I was. And the procedure for me is always, this is just how I do this. There's no reason to rhyme to that. It's just, so it's gold, silver, Bitcoin, ES in that sequence, but there is no sequence preference. And then when I'm through that 4 block, if there's trades, or if I have a day like we had on Tuesday setting up, I pick my highlights. I want to put my money on the strongest horse. So it ended out to be ES and silver, where I thought I get the most bang for the buck, and luckily it turned out that way. But now, from the prep perspective, let's just start with gold, and here it is. If you, Matthew, can scroll this a little bit up, that we can see it better. Maybe you can even click it. Maybe then it gets even bigger. Yeah, perfect. Okay. Where the vertical line is, that little yellow dotted line on the indicators, and then I made it a little skinnier for the top to not override the shadows of the wicks of that bar. That is Monday. So it's 2 more bars there because today's is Wednesday. But imagine you can only see the chart from that perspective of the yellow line. This is the only thing that I saw at the time when I prepped my daily stuff for the next day. And we're not talking daily call right now. I'm not going through that procedure. We did this before. We can do this again. Right now, I'm basically literally just checking simple edges, bread and butter, simple stuff that every trader that doesn't know my system or the daily call can clearly identify, and how, for me, a picture comes together. Because the first thing that I want to know is, how is the overall market? And I saw this with the monthly and weekly. The next thing that I want to know is, how is the market again overall? Meaning, if I see all the markets being short, that they line up, because as much as this quadruplex of gold, silver, ES, and Bitcoin is actually nicely spread, meaning they might run all at the same time, but you have seen in the last, let's say, 5-6 sessions that it's always like, oh, this is a great day for Bitcoin, but ES goes sideways. Oh, or is untradeable. And vice versa. Oh, ES has a nice move, and Bitcoin is just choppy sideways. So there's a reason why we're picking gold, silver, Bitcoin, and ES. And if they're all lining up, then it's even more excellent, because that's not happened all that often. So it's an additional edge if you don't have to worry, well, will we rather go Bitcoin up tomorrow, or will we rather go ES go up tomorrow? So in this case, we have 2, 4, 5, and I count that little red doji as a green bar too, because it was just a small uncertainty bar sideways of a bounce up. And then we have that red bar, and it closes at its lows. So that is definitely a weak sign. And if you're looking at the 20 and 40 moving average, the 20 is yellow and the 40 is turquoise. Um, they're all pointing towards downside too. So that rollover from this top 3-4 weeks ago, it has already continued. This is basically the possibility for a second or a third leg, however you want to interpret this. Um, but it's not sexy. It's not like from a pure price perspective. I'm like, well, I'm not necessarily saying, okay, I want to go short the next morning on gold, but it's certainly the Bears won this day. And I also always think in these methodologies of psychology. I don't care about how these candlestick patterns are called or whatever the underlying stories are that different teachers tell. I'm just thinking, well, everybody who bought today lost. It's that simple because we're closing at the lows. So everybody who bought today lost. The Bears won this game. So that doesn't say that the Bears would win this game one more time tomorrow. But if we're looking downwards toward the indicators, we haven't discussed this hook from extreme in the on the CCI, this which is the top row of the two indicators, a momentum indicator. It's an anticipatory one. It's one of the very few indicators that actually give signals early. That little double top hook from the turbo from the yellow line, it's the fast settings, is actually a short signal, as is the hook from extremes, which is that blue one, which is slower CCI, is somewhere at 150 or something like this. So that is actually a signal, but you guys don't necessarily know that because we haven't talked about that yet. But what we have talked about, what everybody who's for a while in the room already knows, is the sling setup from the stochastics. Now, this is a directional indicator. So this is an indicator, not an oscillator, like the CCI is an oscillator. That shows with the red line the slow stochastics. With a slower setting is oversold below the 20 level, while the fast one is at 80. We don't see on Monday yet that it's turning, but this is a setup for a continuation sling short. So at least from an indicator perspective, we would like have at least fair chances for possibly the next day being or whatever. But this is somewhere in the neutral zone. This didn't go on my radar where I said, oh, okay, I have to short gold tomorrow. Quite frankly, actually not, because gold is very bullish overall. We can see that on that leg before that goes down. These are not clean trading legs. This is always a down day in a green bar, a down day in a green bar, a down day in two green bars, and then a few red bars. But it's like it's very itchy to it's dragging down. This is not clean down legs. So overall, it's not a preferred short object right now. Then let me get the next one. So I have a neutral here. I have basically number one of my system is a neutral setup. Then we're going to I'm going to forward this one. If you could make that big again. Okay, this is silver. Now silver is extremely sexy, and I will go through various charts here on the daily why that is. You can see I already went at the lows with that yellow 21 something muffins short on the actual lows. And I will explain now why silver really stuck out to me. So number one, how much can I get? Trades are only that much worth, especially if you buy something at the end of the day, because that means you have to stop somewhere on the other end of that candle. You need to know, okay, what can I get out of this? And you see to the left, that's that trend line. That's directional support. I want to have you all being aware that sideways trading is just one part of sideways trading, meaning, yes, price goes 80 or even more percent sideways, but I do not consider a chart that doesn't have directional lines in it, and moving averages are fair as a count too, because they're basically also just support resistance lines from a directional perspective. But do put your directional lines in? They're very valuable. This is not all just zones and sideways and horizontal stuff. Trading goes most of the time sideways, but is also directional. So that was the target. And by the way, that was the target. That's where I went out today. That's where I financed. Not today, yesterday. So I was like, oh, okay. If we get moving tomorrow, again, please subtract from your mind the last two bars. We're talking now about the bar where the orange short arrow is above, which is 3 bars from the right. That's what we see on Monday. And I was like, oh, okay, this I really like. Why do I like this? Because of the expectancy, because there is enough room to make another leg downward. And I like how much I can get, because you see the risk reward ratio basically present with that trend day that we had yesterday, plus that bar that we're talking about on Monday. Again, we're closing at the lows, and we're closing right at the 200 moving average. That's that purple, slightly sideways line, the darker line. Have a look to the downside. And amazing from a beauty perspective, and that's what I always just care about. How nice are the signals? And unfortunately, most people don't trade when it's really looking easy or simple, because they think, this can't be true. Trade the nice stuff, guys. Don't make it hard on yourself. Trading isn't rocket science. If the signals are clean and nice, that's the trades to be taking. So look at that zero line reject. It doesn't come any better like this. When the distance is really large between the turbo, that's a yellow line in the upper exactly, towards the blue turquoise line right at the zero line. That's why it's called zero line reject. It doesn't have to be there, but this is a textbook beautiful setup. And on the bottom, same thing like with this other thing. It's a sling setup. It's not all the way at 80, but it wasn't on the prior short either that worked out really well with 4 bars going nicely down from 22 all the way to 2075. So nice one. In the back of my mind, okay, I have a beautiful setup on silver. Gold is not against me, because silver, when it moves, it always moves with beta. That's why I trade silver more than gold, because you get percentage-wise better returns. It's just more aggressive, more volatile. But you don't want to trade against gold, because it's dependent on gold. So if they both line up, then trade the weaker one if you want to short. And ideally silver if it also looks good, because you get more bang for the buck, and you're happy that like gold is not holding the show up. Explanation why this is so sexy. Second explanation. Okay, white lines. That's the beauty principle. What happened in the past? Looks symmetrical, doesn't it? We have that white top sideways. First, it was small leg up into the right circle. It was little retracement at that overshoot level of the 200 moving average, and second leg up to the highs, sideways, and then symmetrically down. Down is always going a little faster, and always going, or very often going a little deeper when it's the same retracement. So it's at 100% retracement, it's typically 110, 115. Now, why do I like it? I like it because the distance, and this is what the white circles describe, from the 200 moving average are identical. So where the highs were of that Monday bar were exactly at the same distance highs to the white circle to the left. This is the beauty principle. We have mirrored levels here. It's very attractive. Okay, next bar. Next picture, next slide, please.
Sorry.
The distance is
Sorry, Kobe, if I interrupt you. Can you please go back one to the last picture? Did I understand it correct that the highs of the left circle is in equal distance to the 200 moving average
The center,
compared
the center,
to the center?
not the highs of the
Uh,
circle, like to the
yeah,
center. The middle point of the circle
yeah.
is the middle point, and it touches the circumference of the circle touches the 200 moving average. And then look to the right, it's the same thing, and the circles are the same size. That's
Okay,
why
gotcha.
it's the same
Okay,
distance.
okay,
Sorry if it's
gotcha.
like it's just my way of representing this. Um, if you make a little white line just from the center to the 200 moving edge, you can hardly make it out. But your eye is very good in comparing two circles, whether they have the same size.
Okay,
So if I see the same size, then I know, oh, this works well. And it also points out what kind of point I'm looking at, which is that middle point, that high of the bar of Monday is the circle is the circle center. So that's why I use circles for these things.
okay,
And yes,
gotcha.
you understood. I think you understood correctly.
Yeah, yeah, exactly. Yeah, it
Good.
was a confirmation. Thank you.
Next slide. Thank you for being my slide guide. Um, Same thing here. Distance of the last time price moved towards the 20 moving average to distance, and it looks a little distorted because at we already have 2 more days. So the 20 moving average moves further down and then it looks closer. But again, if you're looking at the bars, you see that it's at the circles, you see that it's actually the same distance. So same unit principle. We had a retracement up against the trend. We have a trend down here in place on daily. And the last time price went down was somewhere at the 12 moving average. So what people always do is they take fixed moving averages and think that prices go there. That is wrong. But what actually does have a high probability is that prices will go to the same moving average that they touched last time. Now I could make 50 moving averages in there and we would see, okay, color 17 is exactly the same distance. I always just have 20, 40, 200 in there. And then I just measure. And over time, you don't have to measure any longer. You can just like your eye does this. Here for representation, I made the same thing with that circle where you can see that the circles are the same and they're touching those highs. And the cutoff segment of the 20 moving average going through the circles are about the same size and the circles are the same size. So another edge that I really liked. Next slide, please. And no worries whatsoever to interrupt me. Please interrupt me. That's totally cool. Okay, this thing shows again where my entry was for the silver short at the end of the day, 20 whatever, and expectancy, which is how much do I get out of this thing? And that's plenty. Okay, plenty. We got financed so nicely. So seeing this, I was like, okay, I want more of this. This is a sexy setup. And I traded them the next day, and I posted both of these trades also in real time. So next slide. Um, Sorry, you have to go one more back. I missed something that I have to still tell. Why is this thing on the bottom? See to the right that there is first the valley and then a little high on the transactional volume node of the VWAP. That's why. So exactly, valley and the high. Very high likely point that, especially after such an extension, that we're having a break. Next slide, please. Now, my call was sideways to down. You know what the rules are. these sideways or sideways with a direction, it's always the tops and the bottoms. So for sideways day, 60-minute double top, white one, 60-minute double bottom are always attractive plays. Now, just for a little tail that can prove this double, I actually already went not short where that red arrow is, where I posted it into the room, but I was that aggressive that I went short on the first bar 2 hours earlier. And this was at a time when I actually talked to Matthew and said, see, this is what I'm talking, because we had a session where I was teaching him, and I showed him, hey, right here is the setup right now where we're going short. He said, like, oh, okay. And then I forgot to post this in the room because I wanted for everybody to see where the entries are. 2 hours later is the really nice confirmed signal, double top, 40 moving average resistance. It took another 4 hours through the night, and it built a triple top. So everybody in the morning also had a chance to still get into that trade. Short entry 21.10, and then first exit at that green bar down there. It was very nice. I mean, you get 5% or whatever this was just for the financing point. So these trades it's worthy. It's like 5% for financing. We guys, hedge funds who make 5% a year consider themselves highly successful. We can do this in a trade. So this is important stuff. We're not dumb crypto scalpers who expect 5x, 10x, whatever kindergarten stuff. That's highly risky. This is silver futures trading. This is very conservative. I mean, it's not as conservative as ES trading, but this is there's plenty of liquidity that any hedge fund can trade this as well, these daily setups. So this is low risk, and it is why I'm so enthused about this lesson today is you gotta get these days. These are the easy, lots money made days with for example, that Friday trend day up plus that Tuesday trend day down, since I caught them both on 2 instruments and with extra size, that makes up for my expectancy of my system for over 2 months. So in 2 days, I made the money that I typically make in 2 months. This is why I'm sharing this, because I'm like, you all gotta be short. I cannot believe it. I read 72%, and I'm like, this is how bad a teacher I am that there is nobody short. And I felt like I was, and I don't want to lure you guys into trades. I don't believe in shadow trading. Everybody knows this. But I was like, I pre-warned. We have this exception of money no trading. So the only thing I think I can do better is really if you just address me, ask me, oh, you're not going on Monday? What does that mean? Because for me, there's so much stuff going through my mind that besides where I can just say, guys, all go short. And that doesn't help, because that's just putting pressure on the trade, which is what nobody wants to have, that there's pressure on the trade and you just screw it up because you whatever go into early or too late. There's little that I can more say than what I do, because I share the charts, I share that there's good expectancies, I'll document of how I feel or whatever. For example, when I pat my back, this is not like trying to show off when I post that nailed it sign or something like this, or as I said, when I pat myself on the back, that's just a conditioning process where I say, job well done, or found the right horse, or that's not trying to like. When it's after the fact, who cares? This is not like me, like, hey, did you guys see I'm the hero here? This is trying to point out it's important. This is the good stuff. Please pay attention. And it's my procedure. I also share pretty much what I just really do. in the channel without trying to confuse with details that maybe might be stuff that we haven't talked about it yet. But it's I really try to share myself and that system to the point that you get value out of it. And I'm embarrassed a little bit that if 72% doesn't get that this is the exposure time, then obviously the sample size is small of how many people are participating. But maybe I'm doing something wrong, and the only thing that I can offer is ask questions. Ahead of time, after, real time, whatever it is, just ask me. Ask. The blue channel is open. The only reason why the red channel is closed for directly talking there is not as a sign of, oh, I don't want anybody to talk. It is only so the sequence of the postings aren't interrupted by a lot of dialogue. So if somebody wants to look back, he doesn't have to scroll through hundreds of a personal dialogue with one person before he finds the next chart that was relevant to the last trade. This has to do with these quad exits where we always have like 3, 4, 5 charts for one trade. So this is just a logistical thing. Okay, so this was the second trade being short the next day with a double top. Then I'm checking out Bitcoin. Did you go for 2? Whatever. The vertical line again. What does Bitcoin share? Bitcoin had that move a few days before. It didn't have a trend up Friday. It basically, Bitcoin gave out with this head and shoulders formation. Again, the right shoulder on top a little shorter because shorts go quicker than the left one. Was also, remember, was also a very nice day on that day. That's where those two, where Matthew posted those two, the chart with the two ellipses on the downside, that this was also an anticipated short, came a day later than I thought. I planned this on the 28th, but at least I got direction right. And if you're looking at this thing, where the vertical yellow dotted line is, then you see the previous day, and here we obviously have weekends, so this is a Sunday thing, or Saturday to Sunday thing. We had a rejection of higher levels of 22,800. We still have a green bar, but after that long trend down day, it's totally struggling to get up. Higher lines get rejected, and then we basically have on Monday that an inside day of a doji day. So another doji even smaller, absolute sign of weakness. So that will not be in my way. Do I want to aggressively short this from the perspective of confirmations? Not so much. And why is that? Because I don't expect another 10% down day. The others had nice expectancies of what I can get out of this. Here that we're getting in trouble of 4 days prior lows at 22.49, 0.49 is highly likely. So I expect there rather a choppy day or something like this. And what I also don't like is if you're looking to the right, that doji day still closes above that high volume node of the VWAP. So it has basically initial support. It broke down too because the whole, as I said, the whole market went down. And this is a short setup. Don't get me wrong. So again, now we have looked through that instrument as well. Nothing in the way of these prime setups on silver. So gold is for short, but not that attractive. Silver is very attractive for short, and Bitcoin is also a short. So I'm like, okay, let's check ES. Is ES against it, or do we have like one of those prime days? Next chart, please. Thank you. And S&P, when I see this, I started drooling. I was like, oh, okay, I get a second one. Now, why is that? We broke horizontal trend line again. We had that double top, we broke, and then we broke major support. This is the major support, is that white line. We went down the 200 moving average, built the 200 moving average double bottom. It's the turquoise line. And as typically happens, going up against that resistance. And what do we get? 20, 40, and white line. And we built a tiny dragonfly doji. In the next chart, it will show better because this is overriding here the wick of the candle. And look below. I mean, if there is a nicer zero line reject to be found, send it to me. This is like super momentum up of the turbo line, CCI right at the zero line. And what here's the most important thing to be noticed. See how this is anticipatory? That hook is already completed on that Monday. So can you already short that on that Monday? Possibly. I'm not doing this that aggressively after such a strong trend day on Friday. But when Monday finally built this thing, and again, the sling on the bottom on the stochastics. Slow stochastics oversold at the 20 line, fast stochastics almost at the 80 line. Oh, no, it's not true. Not on Monday yet. It goes one more further up. But it's at least a continuation sling from that diagonal line of the red slow stochastics. You learned that one here too. So we have indicator configurations and definitely wonderful resistance line. And this is the classical setup. You break the trend line, whatever one it is, it retraces one more time back, and then come the big plummeting thing. So my setup, next slide, please. Matthew already fell asleep because it's boring. Just joking. So here you see this better, zoomed in without the vertical line. This is a dragonfly doji. So now from a candlestick perspective, absolutely prime signals. Now, what's a little intimidating is how long that bar is from Friday. But for this to go higher up with these indicator settings below, not so much. So again, very, very lovely setup. Now I have 4 instruments that point for me to a south day on Tuesday. I'm super excited. Now I want to figure out, okay, I know it will not be Bitcoin, it will not be gold, but I still want to know, because I typically expose when I trade double size, not double size on everything. I'm a super conservative trader, even with these hit rates. So do I trade larger size? Yes, I trade 1.5 and 2.0s. It was 2.0 on silver, on my silver bet. But for the ES bet, I went for regular size. Sometimes I do a 1.5 mix, but I didn't. And this is why I also didn't go short already on that Monday, because this is very attractive, but not as attractive as silver was. Next slide, please. Matthew, can you give me the next slide, please? Thank you. Here's a description of what I said before. Break with the white lines represented. Break through resistance, bounce from the 200 moving average double bottom top up, going to the highs. Now here also high support. If you're looking at that 40.84, then you see that this is that white vertical small short line. This is that whole volume block, and then comes the valley. So valleys are basically also support zones, which also would be from the double top situation in the top block, be the resistance zone. So I have resistance on top from that perspective as well, and now expected down move confirmed with the indicators. Now let's talk expectancy. Hopefully that comes with the next slide. I forgot how I did this. Next slide, please. How much can I get? Because I need to know if a trade is viable to take. So here I extended the top resistance line so you can see why this is resistance before the valley. You see the different touching points of the different candles on that line. So this is a general horizontal distribution zone. Next slide, please. So next day, the classical thing, sideways to down call. Lovely wide double top. The first one is just 3 bars, and in the middle of the night was not that attractive. But then where the orange arrow is, when we have this 3 for the third time tested and strongly rejected, that's a go. Now let's figure out why did we finance this. Is actually pretty simple. When you have that 4,000 number looming below, and it was this precise level that we measured from the silvers, all markets are related, plus the time of day is here. The financing was well done because you can see it bounces here right after with that green bar. And then made the second leg, and I financed. I took the next target there because that was just that nice
Kobe,
profits. And yes,
sorry if I interrupt you. You just told us that due to the intermarket relationship, your financing target was confirmed. Did you do some calculation in order to get that confirmation, or can you explain or can you show us
typically it's always
what
the
did you
same
mean by
thing,
that?
which is typically it's always the same. It's time. When I have here the 4,000 level, right? This
Yeah.
thing doesn't fall through 4,000 before bouncing before after moving. This is 65 to 405, 60 points. S&P 60 points. That's a go. That's a lot. That's a lot of points. That's a lot of. So it starts to get exhausted. Plus, it starts to get support. I have a 200 moving average, not that much valuable on 60 minutes because it goes sideways, and the confirmation is just like if I hear my financing being triggered on the other instruments, if I hear that, oh, here's the exits on of silver, then I'm like, why would I be greedy after 60 points cashing
Okay,
in here
gotcha.
possibly? So most of the time it's either that the doldrums are starting or that the doldrums are over. And then another instrument basically has their financing thing. So I look at that whole picture, so to say. That's so that doesn't need to be a lot of calculation. It's just like you typically just hear like bling, 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 bling. And this is your 4 shorts getting financed. So expectancy here, to answer your question, same thing. See how price to the left, 200 moving average from that low bar, same thing right here, right now, 4,005, and the same with the 2 circles. Next slide. This is then from the 60-minute perspective. This is exactly where I went out at 4,006. So here is one of when you ask me, do you measure this? Yeah, this was measurable here with these circles again. It's the same distance. After as I said, after 60 points, you don't have to force anything. Just finance. And if you financed after 40, this just fine too. Never be greedy, or at least I am trying never to be greedy. It's financing. And what if there's some dumb news coming out and this thing is just shooting back up on action-reaction principles? See how far that green bar goes up. This is a 24 point bounce. Why sit through this? This is just agonizing. That's the whole reason why we have financing, that you don't have to agonize. And this was the last part. This was the last slide anyhow. That's it. We're done. So to go back, I made that. So I had one really nice trade here on the ES and 2 really nice trades on silver. And I found it, this is not something that I use very often, to be fairly easy trading day from the setup, from the entries. You don't have to sell the short right on Monday that I did on silver. Like literally, I was so drooling. I need to have this thing right away. I was like, what if this just falls down? Because sometimes it does this. And I was very confident that I would see very, very little bounce back into the old bar, because it was so it literally, it was a setup for all amateurs just as well. It was just very visible. And I encourage everybody, take the easy trades, do it. And for God's sake, the most important thing, do not ever mess around with your system by saying, oh, but this is like, it was a weird thing because Monday, and then this looks too good to be true. Because a lot of people do that. They're just like, hey, this cannot be that easy. It is. It really is. The hard part is to have the discipline to execute all this stuff. And the harder part is I don't expect any of you to have 2 trades or more size, or that's harder to do, to ante up when these days are coming, and to trade both instruments. If you just had any short on that day, or for whatever reason any short of already have an entry from the previous day, you're good. Doesn't have to be 2 instruments, doesn't have to be leveraged, doesn't have to be, but to have no short on Tuesday, something's wrong. And I'm not saying, yeah, everybody's at a different level of training, and I don't say that. I don't want to interpret because it's just a stupid Paul. Maybe you didn't have a short because whatever, you were at the dentist. That's just fine. But if you were hesitant, or if you expected to be short, or if you weren't short, but whatever, if it's a trading error, then this procedure that I just showed should eliminate of how procedurally this should happen. You should go through your, and you don't have to do the daily call on this. This is not like this is just a logical trading for every regular TA trader. Trend lines, indicators, double tops, setup prep, just regular setup prep. This is the turning point, small bar, and confirmations that this will not be an insignificant pause bar for continuation to the upside. No, this is the whole market is pointing south. So go through your field of various instruments that you're trading. And if you see this all lining up, as I think is very clearly happened here, take your trades. Just take your trades. And this was also very hard to mess up. There was no reason to not get, wherever you went out, at least a semi-decent financing point. But not being short on Tuesday is awkward. There's something missing. And if I can help to fill that missing void, that's why I'm here. That's why I did this presentation. So feel free to ask any and all questions though.
Kobe, in the beginning of your presentation, you told us that Monday was, from your perspective, the day where you would sideline, and you're basically referring to the monthly and the weekly time frame. But to be honest, I didn't exactly get your explanation. What were your reasons to stay away on Monday? Can you explain a bit more about that, please?
We had bull days on Friday. We had a very
Yeah.
strong Friday thing, and it ran into resistance.
Mhm.
All that stuff that I just explained of why this is good for shorts is short support, which is resistance. It's a distribution zone. So when Monday is such an active day, typically, but we also had a news absent day, which is what is right now. It's like appalling to me, literally, of like, if there's no news, there is no trades. It's ridiculous. It's like there is such an uncertainty, such a non-participation and non-conviction from an individual trader. Nobody wants to put their dollars out. Everybody is basically just waiting till some significant person is saying something in the news, and then oh yeah, okay, this might be a reason to go short or long. That's I mean, we always have news-driven markets, but we have this right now to an extreme that's really weird. And when I saw this clearer under the, I always get a very good picture when I have a weekend because I have the time to look at the weeklies too, and not just the dailies. Dailies is for me the most important time frame because it's my setup time frame. Do I have setups? Is there something to do for me tomorrow? Because the daily says do something. And that Friday analysis was a clear no, there's on Monday, there's nothing to do for me because we have no, you definitely too late for longs because we had a trend day. You don't want to like go long after a trend day. The same thing, like, there was nothing to be done today because we had the big day was yesterday. There comes a choppy day or uncertainty day or whatever. You want to be positioned. And the last chart shows this nicely where, yes, we have runners in this thing and for a reason, because we're closed again at the lows today, at the lows of a sideways day. But why would this not, that runner is still, there's no reason to take the runners out. So why Monday was, you have to know Monday uncertainty is rare. It is really rare. This was the first time in, I don't know how long we opened, 6 months maybe, that I made that post. So you don't get Monday on busy days because Monday is typically busy day. But this time it was set up this way because there was no long continuations. Because we ended everywhere in this exhaustion mode after an exhausting trend day. So it is clear it comes either uncertainty for continuation longs or it will be a reversal. And when it's like this, I don't need to be first. I wouldn't short a Friday at the close. That's just not something that I do. Because you hold this thing over the weekend and tons of news can come out and this thing goes further up. So no. And why would I already short on Monday? Well, this is not like up and down what goes in the market. It's always up, sideways, down, sideways, up. That's a big mistake that a lot of traders do, that they don't. Yes, you see already on Monday that we're probably going short. But if there is no reason for you to be first in making that assumption, yeah, why wouldn't I trade confirmed? After I have a dragonfly doji, yeah, this is a gentle way of getting in the next day. I don't know, there's no hassle. And again, if you look at that chart that we have right now, we have a dragonfly doji the previous day, which you can see right now on that chart, but we have plenty of time to find a low risk entry spot, even better from a price behavior than the previous day close, and then you short this thing. So these preps help you a lot to say, do I need to be first? Do I want to wait for confirmation? And the Friday to uncertainty was that we, in all of these instruments, had a rollover. In Bitcoin, we had that inside day. We had on Friday this whitish doji. Yeah, this is not attractive, large stops. But if I have in a whitish uncertainty bar to get a small doji on a Monday, yeah, okay, now I can short. Wasn't the attractive short because there was not much room to the downside before we didn't get that double bottom. So why would I trade that instrument if I have good leverage on the S&Ps? Futures always sexier than Bitcoin from a bang for the buck perspective. I shouldn't say that because Bitcoin has these 10-15% days that you definitely don't want to miss. But in general, just from the price structure with 12.50 per tick, the S&P provides plenty. I mean, what kind of stop do we have here on top? If you're looking at that, and it's 2 for 7 hours double top here, yeah, maybe 4, maybe 3 points maximum. So you're risking 3 points to finance 60. Okay, that's a risk reward ratio, and we haven't even talked about the runner yet. The runner is trading at 39.78. That's 60 and 22. That's 82 points in the green for a 3-point risk. Now that's trading. This is proper trading, not this 1 to 1.5 risk reward ratios that whatever gets sold in the classical trade school, where you're like, oh, you have an edge here. Just don't mess it up, because a little bit of human error and you're still a losing trader. That's why I'm so enthused about this specific setup, because you want these big days. Actually, I think over the long term, you need these big days. You need to have these big days to be a very relaxed, comfortably laid back, because I always show you this, like, oh, I'm almost 90% hit rate. You know what? You don't need a you don't even need a 80 or a 70% hit rate. You're just fine with a 63 and up percent hit rate. But then these days where you get paid, like really paid, where you get in one day the pay that you typically make in a month, that's the days that are just essential, that you're comfortable. You don't need this necessarily from a monetary perspective, but this is the stuff that makes you feel great. Why I was so enthused to start talking about this was like, whoa, I had a monster Friday, and then whoa, I had a monster Tuesday, and the room is just quiet, and I'm like, okay, something's missing. Is everybody else making money, or am I just like full of myself? And of course, I forgot your question with all my babbling. Sorry.
No, perfect. I got it. I got it now. So,
Anybody else? Questions? Is it clear why and what I'm after, and why we're both sitting here together? Is there good? Thank you, Harut, for that heads up. Feel free to also talk about other questions, other topics. This was just that I wanted to follow up on this to hopefully encourage everybody to be more engaged in the daily action, because I really am 1,000% convinced that I can support your trading. But it's always two to tango. You need to come forward. You need to, and I really don't mind from which perspective. If it's too private, then we can go into a personal chat. If it's psychologically, which is the biggest part of trading, I can understand that you don't necessarily want to share everything within a group, but take advantage. Nobody knows how long we have this group. Nobody knows how long it takes to develop these things. So sitting and sidelining is not the maximum that you can get out of this thing. I will soon, because there seemed to be a demand, post my executions live, because I do some bot trading again. So I put actually the bot in the thing, so you see my trades more clearer, how they are planned from the target wise, because as much as I do everything in real time, I leave bots running overnight and stuff like this. So you will get a chance to be even closer to the action, because it will be just copy pasted into the room when I hit my execution buttons here. Well, it's pretty much the same with the charts too, with the errors, but you see more levels, you see more transparency of what's going on. For all those in bracket shadow traders, this is basically a heads up. Please don't shadow trade. It's really nonsensical. You have a dependency, and this whole thing is about being independent and free. So the lessons are way more important than the trades. But yes, maybe another 5 minutes of questions of all sorts. And then we close this because it's a recording. I think Matthew recorded this, and to also let him off the hook because then he can just close his computers. Anybody. But you gotta speak up because I don't read. You gotta mic and talk. Okay, looks like everybody's happy. Well, if you're all happy, then let's cut this a little short. I mean, it's not that short. We're almost here for 90 minutes going. I am very sorry that my partner doesn't feel well.
Kobe,
Yes.
just a quick heads up. Thomas just wrote in the chat if you can hear him, but obviously we don't.
No, we cannot hear you. So maybe you wanna then type your question. I can still answer it if there's a technical problem. Sorry, Thomas. There's no.
Yeah, so he's
Okay.
writing it in the chat. So he just wanted to say thank you very much and how great it was. So
that's easy, but don't be shy. If there was something, there's no rush with typing or whatever. We can still gladly answer your question. Very welcome, Harut. And the show is not over. All these questions can also be posted. There might be follow-up questions in the blue room. You can always forward pictures and whatever also from the red room to the blue room, and then just ask specifics to what you were referring to. And I gladly take the time and answer as best as I can. Good, then we call it a day. Thank you very much, everybody. Much appreciate you all showing up and spending your time. And hope you all get better at trading. And yeah, we're living in crazy times. I think this is a very good preparation for the future because never forget, this is the last business that closes and this is the first business that opens. So no matter what craziness the planet still, or I should say not the planet, but the crazy inhabitants of this planet might throw at us. If you get this thing here baked, at least pay the bills fears are gone. That's a good start. And I'm actually to be honest, I'm a little worried where this is all heading. I think that this was a very fortunate period for the last generations. My parents, like, I don't know, living through the 60s and being old and retired now this was a period free of, in brackets, free of wars of the larger kind. And there were some good times there, but maybe for our generation or younger generations, I'm 56. I think most of the people in the channel are quite younger. There might be some turmoil ahead of us. So having a second footing in the markets is certainly a plus. Okay, see you all in the room again and next Wednesday, hopefully. Thank you.